yesterday, we are going to see the second part of control account. Now, the second part of control account, so we have to take into account whatever the business is doing. So whatever transaction is being done by the business will be recorded in the sales ledger and purchasers ledger. For example, I bought a pencil for $10. This is the layman language. I bought a pencil for $10. So this transaction represents a purchase, but for the business, in the point of view of the business, it represents a sales. I bought a pencil for $10, so the business sold the pencil for $10. For the business, it represents sales. So whatever transaction is being done by the business will be recorded in the accounts of the business. For example, if a business is selling goods, we call it sales. If a business purchases goods, we call it purchases. If a business make payments, we call it payments. If a business receives cash, we call it receipts. If a business returns goods, we call it return outwards. If customers return goods to the business, we call it return inwards. So whatever transaction is being done by the business will be recorded in the accounts of the business. Now, we have to discount, cash discount and discount allowed, cash discount and trade discount. So only cash discount will be recorded in the accounts of the business. Trade discount will not be recorded. Now, a business, at times, a person can become the debtor of the business, and the same person can become the supplier of the business. So at times I can purchase from I sell goods to my customer X, and at times I purchase goods from customer X. So at times the X is my customer, so I will record in the sales ledger, and at times X is my supplier, so I will record in the purchasers ledger. So it is important to know who is keeping accounts. The person who is keeping account is called business. So all transactions will be taken into account in the point of view of the business. Now let us see this question. Jibus sells goods to Kelly and also buys from him. Jibus is selling goods to Kelly and also buys goods from him. So at times Kelly is a debtor of the business, the trade receivable, and at times Kelly becomes a credit supplier of the business. The accounts of the two types of transactions are kept independently. Bush keeps an account for Lee in his sales ledger for the goods sold to Lee. So when selling goods to Lee, Bush will keep an account in the sales ledger and also keep another account for Lee in his purchasers ledger. So when Bush is purchasing goods from Lee, it will record it in the purchasers ledger. So Bush will have to keep both the sales ledger and the purchasers ledger. The following information is available from Bush records. Therefore, Bush is a business, Bush is keeping accounts, therefore Bush is a business. So whatever transaction is being done by Bush will be recorded in the account of the business. Sales ledger balance for Lee, 500 debit. So this is, in the sales ledger, we have Kelly account. At times, Kelly is a customer of the business. In the purchasers ledger, we have Lee's account. At times, Lee is a supplier of the business. So here we have date, October 1st. We write down balance in Kelly's account in the sales ledger, 500. Purchasers ledger balance for Lee, 240. Credit balance in the purchasers ledger. So when the business is purchasing goods from Lee becomes the supplier, 240. So this is the same date, 1st October. Now, receive invoice from Lee, 260 for goods supplied. Receive invoice. Who receives the invoice? Bush. Why Bush is receiving the invoice? Because Bush is purchasing goods from Kelly. So it is per purchases. We receive an invoice because we are purchasing goods. So receive invoice from Lee. Who is receiving the invoice? Bush. If Bush is receiving the invoice, therefore Bush is purchasing goods from Kelly. So if Bush is purchasing goods, it is called purchases. Purchases will have a debit balance, so it will be recorded on the credit side of the purchaser's ledger. Purchases, tell that October 4, purchases 260. Goods sold on credit to Lee, 400, less 25% trade discount. Goods sold on credit to Lee. Who sold the goods to Lee? Bush. If Bush is selling, therefore it is a sales. Sales will have a credit balance. In the sales ledger, it will be recorded on the debit side. We write down sales. How much? 400 less 25% trade discount. So we have to calculate trade discount 25%. 25% of 400. This will give us 100. Therefore, 400 minus 100. This will give us $300. $300. So we have to record only $300 working one. So this is working one, $300. I repeat, goods sold on credit to Lee. Who sold the goods to Lee? Jibus. If Jibus is selling goods to Lee, therefore it is a sales. If it is a sales, it will be recorded on the debit side in the sales ledger in Kelly's account. So trade discount will not be recorded. We just have to calculate 25% of 400. This will give us 100. Trade discount will not be recorded in account. We just have to deduct it. So we record only 300. Lee settled in full his debt at 1st October, paying by check after deducting cash discount of 3%. So Lee in full his debt at 1st October. So Lee owes a business 500. He is paying. Therefore, we are receiving money from Lee 8th October. We write down bank. And then we have to record cash discount. So what is the cash discount? Cash discount is 3%. 3% of 500. 3% of 500. This will give us 15. And then the difference 485. So this is cash received from Lee. On 12, Lee returned goods with a retail value of 60 to Bush. Lee is returning to Bush. Bush is a business. Lee is returning to Bush means Lee is returning to business. So when we are returning goods to the business, it is called returning inwards. Returning inwards will have a debit balance. So it will be recorded on the credit side in Lee's account in the sales ledger. Return inwards. Return inwards. Lee returned goods with a retail value of 60 to Bush. These goods are part of the sale to Lee on 5th October. On 5th October, is there any discount? Yes, 25% discount. So we have to use this discount. 25% of 60. This will give us 15. 60 minus 15. So we have to record only 45 because it is a trade discount. On 19, Lee bought goods 20 from Bush. Lee bought goods 20 from Bush. So this transaction, is it a purchase or a sale? Lee bought goods 20 from Bush. So we have to see in the point of view of the business. Who is the business? Bush. So Lee bought goods 20 from Bush. So for Bush it is a sales because Lee transaction will not be recorded in the accounts. So we have to see in the point of view of the business. For the business, if Lee is purchasing, it means that Bush is selling. So for Bush it is a sale. Sales will have credit balance. So here it will be on the debit side. We write down sales 19 October. How much? $20. Now, Lee sent Bush a credit note following Bush's complaint regarding the quality of goods invoiced on 4th October. Lee sent a Bush a credit note following Bush's complaint regarding the quality of the goods invoiced on 4th October. So Lee is returning. Lee sent Bush a credit note. Why Bush is receiving a credit note? Because Bush is returning goods to suppliers. So when Bush is a business, Bush is receiving credit note, it means Bush is returning goods. So when the business is returning goods, it is called return outwards. Return outwards will have a credit balance. So here it will be recorded on the debit side. Return outwards, date 23 October. Return outwards $30. Listen Bush a credit note following Bush complaint regarding the quality of the good invoice on 4th October. So this is $30. So we will write down $30. Complaint regarding the quality of the goods invoice on 4th October. 4th October, there is no discount, so we will write down only 30, return outwards. Now, the balance of lease account in the sales ledger was transferred to lease account in the purchasers ledger. So this balance in lease account, we have to transfer it to the purchasers ledger. We have to close this one. This is with 820. The difference will represent transfer to purchasers ledger. So what is a transfer to purchasers ledger? 275. 275 transfer on the credit side. Here it will be on the debit side. Transfer 275. And then we have to continue. Bush signed a check in full settlement of the remaining balance owing. So the balance owing in the purchaser's ledger will be, a check will be signed by Bush on 31st October. The difference, this will give us 500, and then we have to deduct this one. We will obtain 195. So here we are, so far concerning sales ledger and purchasers ledger. So this is the question, is the second part of control account, where we'll have discount, cash discount and trade discount, and then we have to take into account whatever transaction is being done by the business will be recorded in the accounts. Okay, for example, I repeat, I purchase a mobile phone from X. So this is the layman language. I purchase a mobile phone. For me, it represents a purchase, but for the business, this transaction represents a sales. So whatever transaction is being done by the business will be recorded in the accounts. If the business is selling, it is called sales. If the business is purchasing goods, it is called purchases. If the business is returning goods, it is called return outwards. If customers returning goods to the business, it is called return inwards. If the business is giving discount, it is discount allowed. If the business is receiving discount, it is called discount received. So all transactions will be recorded in the accounts of the business. So it should be in the point of view of the business. So very easy. This you just have to know who is a business, the person who is keeping accounts of that credit customers and credit suppliers. So once the business is identified, then you can do your question. Thank you very much for your attention.